Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and joining me, as he does from time to time from a remote bunker somewhere in South America, Green Zone Fortunes co-editor Charles Sizemore. Time for you to ask us anything. But first, I do want to let you guys know that, Charles, myself, Adam, our entire team, we're all aware of the fact there's a lot of fear in the market. There's a lot of, rush to judgment, what's going to happen next, which is kind of going to relate to the topic we're going to get to today. But rest assured that, we have your back. And Adam is putting the final touches on something here that I think is going to be pretty great. And what it is a strategy that basically finds investment opportunities no matter what the rest of the market is doing. So the market could be up, could be down, could be neutral, does not matter. Adam has worked out a strategy that will find profits in any market condition. And he's going to be releasing this coming up on August 30th. And we want to make sure that you are a part of it. So if you just click the link right above there, you can find out more information and reserve your seat into this presentation he's going to be giving on the 30th that shows you how you can find profit, again, despite market conditions. Up, down, sideways, doesn't matter. This system finds it for you. So now let's get right into Ask Us Anything today. Brad emailed us and he asked a very simple question, Charles, and I think it's something that might be a little more complex to answer. And the question is are we looking at a bear market rebound? And just for some context here, looking year to date at the S&P 500, year to date, the S&P 500 is down about 12.5% as of us recording it now. If I back that up over the last 6 months, the S&P is only down 3%. Over the last 3 months, the S&P is actually up 5.2%. And over the last month, the S&P is up 4.4%. So this goes back to Brad's question, and that is, are we seeing a bear market bounce?
Before I answer that, I am going to point out that I am not joining from a remote bunker in South America. I am joining from a suburban house in Dallas, Texas. I'll be back in the bunker in South America next week. So just
gotcha.
It's important to have full disclosure there.
Appreciate the
so the question, and this is sort of a bigger picture question, is are we in the beginnings of a new bull market? Was June at the bottom? Was the carnage in the first half of the year, did that end with just the bloodshed, we'll call it, in June? And have we been in the early innings now of a new bull market, or is this a bear market rally and there is more pain to come before this bear market that started in January of this year, before that finally runs its course? So there's kind of a question within a question, and that would be, which is it? Is it bear market rally or is it new bull market? And then the second question is, of course, does it matter? And I'll answer that second part first. And the answer is no, because the thing is, you never know 100% until hindsight whether the market conditions you're in are, is this just a bear market bounce, a dead cat bounce, whatever you want to call it, or is this the beginning of something new? You don't know. You have imperfect information. All of us, whatever you do as an investor, as a trader, anything in between, it's always an exercise in making decisions with imperfect information. You make the best decision you can, and then of course you protect yourself in the event things go the wrong way. And so in our case, what are we doing? We're identifying good, strong megatrends that have staying power. We're looking for stocks that are exhibiting good, strong momentum in a really difficult market. We're looking for something that should do well, whether the market goes up, down, or sideways. But apart from that, we're also protecting ourselves in case something comes out of left field, in case, no matter how much research we do, no matter how much sense our investment thesis makes, if something comes out of left field and makes this perhaps not the best time to do that, if the timing is just bad, then that's fine. We protect ourselves and we wait for the next opportunity. So that's really kind of the more important takeaway. As for the first part of that question, is this a bear market rally, or are we in the early stages of a new bull market? I would say I think it's likely that we're in a bear market rally. And the reason I say that is, one of the things I personally look at is I look at evidence of big institutional buying. And that has been conspicuously absent over the last 2 months now. what we've seen is a lot of short covering, a lot of people that were profiting from stocks falling. They have been buying those shares back because that's how a short sell works. When you sell, when you short, you have to borrow the shares from somebody else first. You sell them, and then you have to buy them back to pay the person back whom you borrowed them from. You may not know that if you're the one shorting because it all happens behind the scenes at your broker, but that's how that works. Those shares, the shares you sell have to come from somewhere, and they come from somebody else's account, and you are obligated to buy them back and replace them. And so that's what happens after you've had a big decline. The shorts start closing out those positions, and that creates buying pressure in the short term. Now, you also have a lot of retail traders that have been sort of, the meme stock traders, if you will, that have also been getting in on this. Now they're starting to look a little bit at risk over the last week or two here, but you do see, some buying from them. But the institutional money has been sitting on the sidelines, at least so far. Now that could change tomorrow. The institutional money could start piling in starting today. Who knows? That would not be, a lot of times a bull market starts with that short covering, and then you get some of those more agile traders getting in, and then the big money gets in, and then that you likely have a good runway at that point. Again, that could happen tomorrow, but we haven't seen it yet. So until I see that, I'm going to view this as the bear market rally and not as a new bull market.
I think the bottom line in terms of how I'm viewing this is that, first off, nobody here has a crystal ball that can tell you for sure what's going to happen even 5 minutes from now, 10 minutes from now, 10 years from now. So to try to figure out, is this what's going to happen down the road? The answer is we don't know. And for me to tell you that yes it is or no it isn't is disingenuous and not accurate, because I don't know. And we are seeing some movement that would indicate that we are maybe lifting ourselves out of a very, very short bear market. But then again, there's also, if you look at some other indicators, that this is a very temporary move, and we could see another leg down here in the immediate future. So at the end of the day, Brad, we don't know. I'm kind of with Charles here in that. I think we may see some pain, a little bit more pain ahead, but I think eventually we may see a little bit longer runway. But again, this is not your dad's stock market. This is not a market that trades strictly on fundamentals and technicals. This is a market that trades on things that we can't even fathom. They trade on headlines. They trade on.
Well, Matt, another factor as well is, we are entering the September and October period, which historically has been a time where volatility can happen. Yes. Volatility can happen at any time, of course, but some of the bigger crashes in history, some of the bigger, spikes in volatility have tended to happen around this time of year, September, October. Doesn't mean it will happen. Doesn't mean it's, extremely likely it'll happen, but there is historical precedent for it. So that kind of gives us another reason to be cautious at this time and not just say, hey, bear market's over, everyone back in the pool.
Right. And I think what might be an underlying thing here for Brad's question, and maybe for other people who are thinking about this as well, is, okay, I really don't know what the market is doing. Is it going up? Is it going down? It's one day it's here, it's one day the next. So what do we do? And we preach this, a lot, and I think it bears repeating. And that is, whether you are a day trader or a retail investor or an institutional investor, or just you've got some money to tinker around with, you're going to play around the market, see if you can make some money. Whatever the case may be, the fact still remains is, no matter what the market is doing, if you have a strategy, this is the time now that you absolutely need to stick with it. Hold to your stop losses, hold to your buy limits. Don't try to fluctuate things just because you think it may go somewhere else. If you have a stop loss set on a stock,
don't relax your rules. Exactly.
Yeah, exactly. If you've got a stop loss on a stock and that stock hits it, but you absolutely love the stock, you have firm conviction that something is going to happen with this stock in the next 5-10 years. It's going to make you a millionaire. It doesn't matter. If it hits the stop loss, you sell. That's it. Charles, myself, Adam, we've run into this situation a ton of times where we have a stock that we really believe in. We have a mega trend that this stock buys into and is a big player in. However, the market doesn't necessarily work the way we'd like it to. So we have to sell the position because it meets our stop loss. Doesn't mean we're any less bullish on the company or any less bullish on the mega trend. It's just the market is telling us right now that now is the time to get out And then we reevaluate later when we see maybe some more indication that the stock is on a confirmed uptrend, and we get back into it.
When you sell a stock, it's not necessarily a divorce.
Exactly.
It's you're taking time off to work on yourself for a little bit. You can always get back together. You're taking a break. You can always get back together later after things have cooled down. So that is an important thing to remember. Nothing in investing ever has to be permanent.
Correct.
You hit your stop loss, you get out, fine. Don't go re-enter the trade the very next day. Give it some time to cool off. Yeah, like reevaluate the trade. I would say at least give it a few months before you consider re-entering, because you need to make sure you're being objective and you're not being emotional about it. But if you love a mega trend and you saw it as having multiple years of runway in front of it, what's your hurry? Like take the stop loss now. Take the loss now and get back in at some point in the future. And if the trade still makes sense, and you're fine. There's nothing wrong with that.
And the same works on the other hand, and that is that if you have set a gain percentage target for your stock, and you say, okay, I'm going to get out, I want to sell 50% of my position once I hit 35% gains, do it. Don't mess around. Do it. Don't wish for something longer don't wish for more momentum to carry it further, because again, this isn't your dad's stock market. Anything can happen on any given day, and anyone who tells you they can predict what's going to happen is kidding with you. They can't. It doesn't work that way. You can look at
they
history.
Could also be insane.
True.
Or just delusional.
They could very well be in a straitjacket when they're done telling you. But again, you can look at history. You can look at all sorts of data is out there. Trust me, I look at it every day. Charles looks at it every day. Adam looks at it every day, and there's no way to precisely pinpoint what is going to happen in the stock market tomorrow, because we don't know. So that all said, Brad, to answer your question, are we in a bear market bounce? The answer is we don't know. There are signals that would indicate that it's possible. There's also signals that would indicate we may see a little bit more downturn in the future before we see that ramp up. So right now we're kind of in a state of flux. However, to kind of go deeper into your question, what you should do, which you didn't ask, but I'm going to assume that's probably what you meant. And that is, if you have a strategy, stick to it. Be hard with your rules. Don't bend it. If it meets the stop loss, sell it. If it meets the gain percentage, sell the percentage. Do what you have to do, because this is the absolute time when the market is in flux like this that you should be following your rules almost to a letter. And if you don't have rules to follow, if you're wondering, I don't even have rules, I don't know what I'm doing, perfect. We're more than happy to help you. Adam, Charles, myself, our entire team, this is what we do. We set these rules down in place for you with our service like Green Zone Fortunes, where we give you a stop loss, we give you a buy up to, and we tell you when it's time to sell or when it's time to buy. And we communicate that to you very clearly, monthly, or when it happens, when those limits happen to be hit. So we definitely encourage you to check out our Green Zone Fortunes. We'll try to throw a link up here somewhere where you can find out more about Green Zone Fortunes. And if you don't have your own strategy, we'll certainly help you develop one and get you on track to make that happen. If you do have a strategy, hold it. Don't play around. Don't bend the rules. Don't be flexible. Okay. If it hits, it hits. You can buy into it later. Like Charles said, you're not divorcing the stock. Okay. You're taking a break for self-improvement. And if you meet the buy up to threshold, sell out for partial gains, maintain that capital, preserve that capital, and do with it what you feel like you need to do best with it. Whether that's to maybe invest in that stock you sold out of a couple months ago and it turned down, whatever that happens to be, do that. But it's very important to hold your rules. So, Charles, any parting shots on that? I think that was a very good question by Brad. Definitely appreciate him asking.
No, it's a great question, and I think the takeaway is, we don't know, and we won't know for potentially months. So you have to operate under the assumption that you don't know, and so until you do, just be cautious, follow your rules, and carry on.
We don't know what we don't know. Basically is ultimately what it comes down to. He is Charles Sizemore. He is the co-editor of Green Zone Fortunes. Make sure, again, you'll check the link up top here so you can find out more about Green Zone Fortunes and get that strategy put in place so that you are protected during a market influx like what we kind of see right now. Also, check out moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable, adaptable information. We are nimble. We want to try to find you profit in any market condition, whether stocks are up, stocks are down, stocks are sideways, sideways. We're looking for ways to profit in any market condition. That said, again, remember, August 30th, Adam's going to unveil this new strategy that is recession-proof and does just that. It finds profitable opportunities in any market condition. So you don't have to worry about fear-mongering. You don't have to worry about bad headlines on financial websites, things like that. You can kind of kiss those worries away. We've got a strategy lined out. He's going to lay it all out for you on August 30th. Make sure you click the link above there. You can find out more about getting into that. Again, he's Charles Sizemore. He is the co-editor of Greenstone Fortunes. I'm Matt Clark, research analyst for Money and Markets. Until next time, everyone, safe trading.